everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. Well, if you've been watching it all, I always do a little recap. The last week's kind of gone nowhere. You can see it went up, it went down, but essentially started where it ended where it started after about a week and a half. So we're kind of going nowhere, and volatility is low, which generally means you're not going to see a lot of this kind of thing, because you can see when the stocks or ETFs take a huge dive or bounce around, that's when volatility spikes. And really we've had nothing happening anywhere here for quite a while. And that's why over this last couple of weeks you see volatility kind of going down. And you can see over here it's way down at 2. We're almost kind of at a nowhere level. The NASDAQ is going to look fairly similar. That was the S&P 500. Obviously this looks the same. NASDAQ's at all-time highs. Again, we'll look at the Russell. It's usually the one that lags slightly behind the rest, but again, even this is kind of a similar looking graph, very low volatility. And if we look at volatility in the overall market, we look at something called the VIX. This is the volatility in the S&P 500. This is the future. This is like the most accurate way to look at volatility. But again, pretty obvious. You can see nothing's happened for essentially the last few months. And there was a little bit of a bump here, and then it's going back down again. And if you look, that'll coincide with over here when it took this dip a couple days. That's why the volatility spiked there for a couple days, and now it's going back down. But overall, the market has very low volatility. So to find volatility, we got to kind of look around. So what I'm going to do is I'm going to go over to Boeing, and you can see this volatility is a little bit better. You can see, except for a few bumps here, which generally was around earnings, which is always going to happen with spikes, the volatility is kind of at its high that it's been for the last 6 months. So volatility is good in this one. You can see it's up at 57, which is great. I've already put these numbers in here because this is going to be our trade. So you can see I put 160 and 190, and the reason I did this was to show you that essentially over the last few months the stock price has stayed in this range. So since back here on March 4th, almost 3 months, it's kind of bounced around between 160 and 190. So if I'm looking to trade a range, why not go with the range it stayed in? Doesn't mean it's going to stay here for the next 45 days or so, but you know, we have to make assumptions somewhere. So we'll go to the trade page. Remember 160, 190. We'll go to the trade page. We're going to go out to 53 days because tomorrow that'll be 52, right in our wheelhouse. It's also monthly expiration cycles, so they're more liquid than these over here, which are like quarterlies and weeklies. And I've saved us the trouble by setting it up already. Remember, we want to stay between our two short strikes. So that's 160, 190 is what we sell, which is right between, right around this number, $15 on either side, kind of right in the middle is where we want the stock price, and it is. And we, in this case, have to go $5 wide because those are the strike prices. We don't have 1 and 250 as strike options. They're $5. So it's a bigger trade. So how do we know how much to collect? Remember, for the most part, we like to collect anywhere from 33 to 40 cents per dollar width. So if I do 33 times $5 width, that means the minimum I'm looking to collect on this trade is 165. And right now you can see we are fine. We're at 182. So everything stays the same. The market opens up tomorrow in Boeing. Stock price stays at 175 roughly. We'll go $15 up and down, create a $5 wide iron Condor, and look to collect at least $1.65 or more. And that will be our trade in Boeing for tomorrow. So what is your goal here? Well, mine has always been to get to where my money makes more money than I make. Let that one sink in. Look, I'm just a regular guy with a full-time job, but every day I get home, I look at my trading account and I see that I have made money while I was actually working full-time all day. Now, wouldn't you like to see that too? That your money made you money while you were actually working? Well, you're never going to get there until you actually start. So don't you think you'd be a little bit more comfortable and confident if I was right there by your side making trades with you? Where now I will be there with my real-time alerts. You'll trade side by side with me in real time as I tell you what trade to make, why we're making the trade, and more importantly, how to make the trade correctly. But making the trade's only half the battle. When to close the trade is just as important, so you'll get those closing alerts as well. Listen, you've got the knowledge now, so let's put it to use. So how do we turn your knowledge into actual income with as little risk as possible? Well, the way we do that is by offering up the option alert for only $1 for the first month. Now, the option alert itself is going to send out 2 to 3 trades in real time as I make them via text or email directly to you. And as I close these trades, you'll also get those closing alerts in real time as well. Now, if you want an even better opportunity, the Option Pro, which is the exact same alert service as the Option Income, offers up all the content I've ever made, courses, webinars, etc. Over $2,000 worth of options courses for only $19 for the first month. So the way we're going to sign up for either of these is by going to sharpertrades.com, clicking on the products section. Both of these alerts will show up. Depending on which one you prefer, you'll type in these coupon codes, and you'll either get the option alert for $1 for the first month or the Option Pro for only $19 for the first month. Look forward to seeing you all over there soon. Take care.